Yeah.
Here in Australia, it's all about energy, of course, and our gas producers think that we could just get a little boost from this trade war because China might look to us.
OK, so that's true. So today, actually, Meg O'Neill, who was the chief executive of Woodside, is speaking. And we've already got a taste of her speech. But what she's saying, she's urging the government to try and allow more gas to be produced here in Australia, and says this is about the way in which Australia will boost its competitiveness. But in the meantime, what also takes place is if you consider that if China puts tariffs on LNG imports from America, then China will look elsewhere to find that LNG. It could go to Qatar, it could come to Australia. And it is fair to say that a lot of China's LNG already comes from Australia. Now, given the fact that really, in some cases, with falling prices, that these LNG producers here in Australia have probably done it tougher over the last little while, it's just going to be fascinating. But again, the East Coast gas crisis, which is driving up electricity and gas prices on the East Coast of Australia and taking competitiveness away, that also is one of the keys. There needs to be more gas found on the East Coast of Australia.
How many times does Meg O'Neill have to say that? How many times does AEMO have to point to this crisis every time there's a hot day or a very cold day or, you know, the wind is blowing? I mean, Ross, what's the impediment here? Because gas in the short term is the only way back to some kind of reliable energy and bringing down prices, therefore attracting investment and making Australia a good place to do business.
And even the federal government, which you'd imagine has its own green leanings inside it on the left of the party, admits through its gas policy that Australia needs gas out to 2050 and beyond. But the problem is environmental restrictions when it comes to new gas developments, which get held up for, in some cases, decades and don't come to market. Now, the other factor is that most of the gas that comes from the East Coast of Australia, a lot of it is shipped overseas at international prices because of deals done
they're in
previously.
Contracts, right? They're tied up in contracts.
Tied up in contracts.
You can't just...
But technically, you want more of that gas to come into the local supply at local prices.
That's right.
And not at international prices.
How does that happen? How do we make that happen?
Because, well, that's government, isn't it? Government's got to make some decisions. And or, secondly, you've got to find some gas here in Australia, environmentally get those projects across the line and have those projects actually reserved for the Australian market.
OK, Ross, what about the market today?
So the market today, a couple of things happening here. They're going to be a bit stronger, as we said. But first off, let's tell you about REA Group, which is owned by or controlled by News Corporation, which is part of ours. News Corp had results out overnight. So its results are out today. And not only is REA the dominant real estate player here in Australia. Revenue's up 20% for the half year, net profit up 246%. It's an anomaly, but the underlying profit, you can see here, up 26% as well. So all of this has been strong, but it's Chief Executive Owen Wilson has today said he will resign after 6 years in the job. Now, he's expanded that business into America with a stake in Realtor.com, or Move Inc, as it's called. Also tried to get into the UK to buy Rightmove. That was rebuffed. Gone into India. That's one of their big movers right now. So it really has. And if we have a look at its share price, even over the past year, you can see the share's up 34%. So it's been one of the really strong movers. And given the fact some suggest right now its rival here in Australia, which is Domain, controlled by the Nine Entertainment Group, could be potentially up for sale, this is kind of an interesting space to watch in terms of where real estate goes in the future.
OK, Ross, thanks so much. Appreciate it.